Hey guys, Alex here from MarketWise Asia and also from Seasonal Vantage. So in this video, I just want to go through with you the options flow analysis, okay, on the tech software ticker symbol IGV, okay, ETF over there. Okay, by now you should know that recently a lot of these software company, SaaS company, software as a service company have gotten crushed, okay, due to the fear that AI will eat them up. Okay, so before I go into that, I think it is interesting, okay, to know that what actually happened for the past few days. Okay, if you are not aware of this, okay, on the 23rd of February over here, 23rd, just a few days ago, as I'm doing this video right now, okay, from the Citrini research, okay, it published a post called the 2028 Global Intelligence Crisis. Basically, it is just trying to portray a doom and gloom story on how AI will cause a lot of unemployment, will cause all these software company to go obsolete, okay, and such. So basically, the economy is not in a very good shape and it will get worse, okay, as the day goes by. So, it is a negative feedback loop. Okay, I won't go through everything in the article because it is actually pretty long. I mean that you can just go and Google on Citrini research and you'll be able to find this article or this blog post. And interestingly, okay, I think a day after this article has been posted, I think Market Watch and also Morningstar review that the co-author of this viral post, okay, of the AI impact, okay, post says he was actually shorting all these stocks. I mean that whether it is a deliberate attempt, okay, to push down, okay, the price of all these software company and the ETF so that he can benefit, okay, from all his short position. Okay, I don't know about that. Okay, I mean this is for another story. Okay, but anyway, today my main goal is to actually analyze on the IGV ETF whether, okay, it is a good time, okay, to buy or to, really there's no hope for the software companies. Okay, I'm trying to do it in a technical, okay, analysis point of view, okay, using also in with the options data as well. So if you go to, okay, the IGV over here, this is the IGV ETF. Okay, in case you wanted to know, okay, what is this IGV and what are the component stocks of this IGV ETF, right? You can actually go to stockanalysis.com over here and just search for IGV and you will be able to find, okay, about IGV, what are the component stocks over there. So basically it tracks a market weighted index of US and Canadian, okay, software company, and it was launched in 2001. You can see that, the top 10 holding accounted for about 60%, okay, of the weightage of this ETF. Microsoft, Palantir, Oracle, Salesforce, Palo Alto, Adobe, okay, Intuit, CrowdStrike, ServiceNow. All these are very familiar names if you are trading or investing in the US market, okay, and they are, if you have been watching this so-called the price chart of these stocks, many of them have been very severely beaten down. And of course, this ETF is a representation of the whole software company. So since from the peak, you can see that it has dropped about to the lowest is about 35% already. Okay, and not surprisingly, when this blog post article was posted on the 23rd, it was on this day over here. You can see that it had a very sharp negative red bar candle over here. I hope you guys can see from here. Okay, this is a very big candle over there and a pretty high volume compared, okay, to the previous days. Okay, this was recently was a very high volume over here. Okay, and just looking at price action itself. Okay, just looking at price action itself. Okay, without considering any other analysis. Okay, just on the price itself. Okay, in fact, my indicator, it shows a potential star reversal signal. It just tells me that there's a potential that price might reverse and go high. Again, it doesn't tell me the magnitude. Okay, it can range bound or it goes a lot higher or it just go a little bit higher. We won't know, but it does tell me that it is severely oversold, and there's a good chance that price might bounce, or it could be a short-term bottom. Okay, this is number one. But the key things that I wanted to share with you also, it is actually the options flow pulse that I have been analyzing over there. Okay, so this is the options flow analysis over here. Okay, so let's go through that. Okay, before I go, I forgot about that. So before I go through that, okay, I actually posted my analysis, okay, in my Seasonal Vantage Insiders Telegram group chat, what I call the SVI Alpha group chat over there. I can see that I posted this on the options flow thread over there. I posted on the 26th of February early morning, okay, at 12:20 a.m. Essentially, that is 25th of February, okay, past midnight lah. So I talk about, the net intention. It is actually bullish, okay, net premium, bullish, net delta also premium, bullish, and also what are the key clusters of the options position, and also the summary as well. Okay, so I just posted this. So you might think that it is a little bit chunky if you don't know how to read and all this. So I actually did a deck over there just to explain to you here. Okay, so overall, okay, based on the options flow, okay, the bullish premium, it is actually a lot more than the negative premium, the bearish premium. So it is net premium, it is actually around 12 million, 11.79 million. Okay, gravitating more towards the bullish side of thing. And the analysis, it is actually from February 17 to 24th of Feb. Okay, so it is about more than 1.5 week of data. Okay, so it tells us that there's a financial commitment, okay, that the smart money or the institution, okay, are betting heavily, okay, on the bullish side of things. Okay, and okay, combining with the delta, okay, if you don't understand what is delta, never mind. Basically, okay, it is just the directional exposure. Okay, positive means it is a bullish positioning, and if negative means it is a bearish positioning. You can see that the overall net delta imbalance is actually more than 20%. It suggests that it has an aggressive upside bullish positioning over there. Okay, and based on the day to expiration DTE breakdown, okay, you can see that majority of these so-called days, okay, you mean the different benchmark over there, 0 to 9 days, 10 to 60 days, okay, it is mostly positive. Only a very little negative delta on the between the 61 to 180 days. So basically, okay, short-term wise, mid-term wise, okay, it is bullish positioning. Okay, even longer term, it is also bullish positioning over there. Okay, so you can see that within this 0 to 60 days, okay, mid-term, all right, you can see that this smart money, it seems that they are positioning for an upside. So the delta, it is actually positive. Okay, and the premium, it is also at 3.84 million of premium being bought into the very bullish, okay, positioning. All right, and hedging wise, okay, I mean that it could be hedging just within the 61 to 180 days. Okay, it is slightly negative. Okay, so like I mentioned, the only neutral bearish window, it is within this period. So it is a tactical pause, okay, between momentum and the long-term structure over there. So there is also a so-called conviction in the longer term as well. Okay, also quite a large amount of premium being bought into the longer term, more than 180 days of day to expiration over there. Okay, and from the clusters and from the options print, it seems that the institutional, okay, are positioning themselves at $77 strike, and also the $75 strike price, which means that, okay, they are mainly selling puts, meaning that they are betting that that the 75 and the 77, okay, it is like a floor level, betting that this IGV ETF will not go below $75. Okay, it doesn't mean that they are very bullish on the upside, but it just tells us that, okay, they are selling put, getting the premium, thinking that it will not go below 75. Okay, and one of the top so-called prints, okay, they are buying the $90 call, okay, and also selling the $60 puts. Basically, it is so-called selling the put options, okay, to get some credits, okay, to fund their upside buying over there, okay. All right, financing upside exposure by underwriting downside risk, okay. And longer term wise, 2028, okay, it is also bullish as well. All right. So all in all, it seems that they think that there's an upside continuation, okay, into the second half of the year. So this smart money, it is establishing support, okay, basis while aggressively chasing short-term momentum. Okay, so it is the view is more of the upside continuation over there. Okay. Yeah, so this is actually my analysis on the options flow data. And this is just a disclaimer also that it is for informational purpose, not a recommendation to tell you what to buy or what to sell. Okay, so basically, all in all, it is just telling me that there's a good chance that maybe that it is a low. It is basically it is a low in the IGV over there. Okay, maybe it is a low. Maybe it might not be the low. Okay? It might not be the low, but it might be a short-term low, a low over there. Okay, so again, we won't know whether how high it will go, but short-term wise, it could be at a low. Okay, price could range bound for a while or such. We won't know. Okay, but I think that it seems that the smart money, it is a positioning for an upside. Again, this is just my opinion. All right, I'm not saying to ask you to buy or what to sell. Okay, all right. So if any so-called opinion on the software, or whether you think that the AI, it is really going to eat the software company, okay, do comment, okay, in on this video. I'm happy to hear from you. All right, so with that, thanks so much, and I'll see you guys again.